Hello, folks, and welcome back to another edition of Money in Motion. CJ here, joined with your host, Monte. Another day, another big time low in TLT, among other things. But interested to talk about that and much more. Monte, anything that been catching your eye this morning? I mean, a lot of volatility kind of opening up early in some of the commodities, but not a whole lot.
Yeah, I mean, listen, nothing too unexpected happening this morning. We're getting reversal in the dollar, seeing a bit of risk on price action in other sections of the market. But just to start things off, um, you know, just looking at Bitcoin's total or looking at crypto's total market cap barely changed over the last 24 hours. That tells me that there's not a lot of inflows occurring. Bitcoin's daily sentiment is bullish, so that's positive. And moreover, what I find interesting is that Bitcoin's daily sentiment is actually higher than ETH's daily sentiment. But look at the difference in price. It's up 6.63% in the last 24 hours, whereas Bitcoin's down 0.1% in the last 24 hours. Obviously, an easy way to visualize that is the ETH BTC pair. And I think that this is still really important and going to be an important chart going forward for the rest of the week, is watching ETH strength into Bitcoin weakness. So taking a look here, we're getting rejected right at the bottom of this wedge, finding some resistance here. But I expect to see continuation from ETH. I expect to see continued outperformance. And like I had mentioned earlier in the week and at the end of last week, I think that we're seeing something like this where after you get an overreaction and an extension outside of the formation, then when it snaps back even harder and with a lot of force. So I think that that's what we're seeing here. And we could possibly test the top of this wedge. That's just based on, technical analysis and also based on the general strength that ETH has been showing. If you look at the ETH chart versus the versus the Bitcoin chart, I mean, they both look pretty good, but clearly ETH is up 2% while Bitcoin's only up 1%, showing that high beta price action in action. So right now, it seems like you want to be, long ETH BTC. I think that's kind of the play. I'm still in that position, full disclosure. And I'm going to continue to ride that until we see signs of a reversal. But for the time being, right now, crypto is actually looking pretty good. So, and it's not just crypto, right? Like Keith points out, Meta is having a nice move. Some of those big names, those big tech names that have been struggling earlier in the week, finally starting to see some price action. So just wanted to start off with a little bit of crypto, a little bit of, the Trade the Chain dashboard and what we are looking at here. But what are you looking at, CJ?
Yeah, I will go through the Trade the Chain dashboard. I do want to pick out one kind of filter technique that I was looking at yesterday to find various things like kind of Luna and some others that had pumped. But yeah, let's look at the DXY because that really seems to be kind of at a turning point for the market. Like, what I will say is that if you wanted to buy something yesterday or today, like if you're a permabull, you have to buy something when it's up, when dollars is up as well and rates are up. So like yesterday, for instance, I mean, you're gonna be like, this is like one of the main stocks I watch.
Oh,
no, not TLT. I was gonna say Coin was up like 1% or at 1.22% yesterday. And this is not a great example. It's just happens to be one of the only stocks that I watch consistently. So it was one that I noticed. I'm sure there were others in the queues that were, but that's the concept. Like if you're going to buy something, make sure it was something that was resilient as of yesterday. And, there's definitely some stuff on the board that is showing that.
Yeah. Feel free to dive into any examples that you're feeling like talking about, because I agree with you. I think there are plenty of different assets that, fit the bill that you just described, but I'm curious to see what is on your radar here today.
So a couple things I've been looking at,
this move.
Like to see. Yeah, we'll go back to it in just a sec.
Okay, good. Because that really caught me off guard. But you you were kind of ahead of the curve on that one. So props to you on that.
Let's see, where did we talk about it in? So it was at like,
it was up a little higher, I think. And yeah.
So this was just the like, anytime Monte and I we talk about trading, it's got to be. It doesn't have to be, but it is favorable to be a repeatable, consistent process of like a pattern here. You have the clear breakdown of like this flag looking thing where risk is defined. It's Luna. So, even though that funding has gone up quite a bit, you're probably going to get at least some type of a retrace to that moving average, which is something that we did kind of see. If I go back on the 15-minute chart, it actually happened quite soon or like very quickly. So I still think we might have a continued retrace in Luna. But the most of that trade, what was that? Like it was a 5% 15-minute candle. So that was a pretty good ability to like capture that short trade. But that's the type of thing that I'm looking for. That's very consistent, repeatable. Something that we saw that was very similar to this was like BLZ. We've been talking about that, but like IMX and Spell. Check out this pattern where you see a lot of, these are low cap coins. They bleed for months and months and months. They see slight accumulation and then one candle squeezes up. But after that one candle, there just hasn't been a lot of momentum, or maybe it kind of stalls out and then kind of comes back. But overall, that's kind of the playbook I've looked at in terms of like IMX. You could kind of have done the same thing with TRB. Luna is very similar though. It's down only, couple days of accumulation, then a pump, and then it can't sustain it. And then one that did the same type of thing last week, we had slight bit of a run up in Spell top, and we've been down only ever since. I think Hi-Fi is another good example. I'm kind of just rattling off names here, but well, that's not very dark. But,
looks like a literal hockey stick.
There we go. Anyways, so, Luna is interesting after that pump, but I do have to see the strongest thing in the market right now in crypto, I think, is ETH BTC. It's been trending all throughout a risk off environment throughout the previous week. And then you have some smaller other things like Coin that are being able to keep their head above water here.
Yeah. Yeah. And I'm glad to see that there are some people that got in on that trade. Always good to hear that you guys are, trading successfully, and, it's always good to hear. So one thing I did want to mention is back on the traditional equity side of things, and that's the S&P. I'm going to be brief with this one, but, yesterday we talked about this critical level here being 42, like 85. And you can see here all the way back in June, we had this period where after 2 days of overwhelmingly positive price action, we saw some pretty serious consolidation before grinding higher. I think we're seeing the same exact thing, except to the inverse here. And look at CJ made fun of me. He's like, remove your grid lines and your charts will be perfect. Okay, buddy. I like the grid line.
I just said cleaner. I mean, you said something else that I won't repeat on the show about why you kept them, but whatever.
Yeah, please don't. But look at how nicely this came down and touched 4240. Like perfect. It sets up a perfect range of bearish to neutral consolidation, which is exactly what I expect out of the S&P. I don't expect it to break above this level today. I don't expect it to break above this level tomorrow or the day after. I expect something like this where we get chop and then eventually we get a move to the downside. So, clearly we did see a little bit of supply absorption. I think some bears got off sides here a little bit. Insert a joke about the Chicago Bears and how terrible they are. But anyway, like this right here, I think was just a lot of people trying to be like, okay, market's finally breaking down. I'm going to jump in. They jumped in, and then people that were right up here took profit on that opportunity, on that liquidity, and now we're seeing a little bit of a reversal. So I don't see this as genuine strength. I see this as profit taking. This is a reversal candle. However, I do think we're going to see consolidation and then continuation to the downside eventually. Now, what that means for Bitcoin, tough to say because it has been showing some independent strength. OCD is not an altcoin. That's true. That's true. If it was, I would have a big bag of it. But yeah. Anyways, as the S&P, this clearly is still the critical level. Getting above that would surprise me and perhaps have me flip my bias. But in the meantime, I'm expecting something like this where it's like we consolidate below this level, and then rather than breaking up like we did in June, we break down just based on the positioning of traders and kind of just the overall momentum of the market currently. So that's just my outlook on the S&P. Hasn't really changed much from yesterday or the day before, but would love to hear what you're thinking on the traditional side of things, CJ.
Yeah, I'm kind of waiting for data to come in. I think that there are some interesting things that I could go over in terms of equities. It's tough to step in front of this train, like I've said many times.
What about TLT? I hate to bring it up. I know you were kind of forced in the bag holding some. But what do you make?
It's all good. It'll probably end up benefiting long term.
Yeah,
not as a long term hold, but just other reasons. Machiavellian reasons. Well, I swear this was a lot higher yesterday. All right, here we go. Yesterday was the highest print of the year in terms of equity put call ratio,
wow.
Reaching 1.3. So
that is really significant. What when was the last time we had an equity put call ratio like even close to that?
Last December. This is the highest print of 2023 so far. The last highest print above this level came in at roughly our local low in December when we were, trending higher. It's tough. I don't know where to stand really on this because when we look at like COT, I know this data is going back like a week old, but it's still, I'm not going to go through it right now, but it's still just like very mixed signals. But looking at the put call ratio, it's evident that there's fear in the market. When you look at stuff like this, I love bar chart, but there's equity fear and greed index is like the lowest that it's ever recorded in the past year and a half that they've had it going for. So all of these types of things are kind of interesting to me, and could hint at a level where we could get a nice bounce. I suppose we've swept these lows, as Nick would love to say, but it's hard to buy something without getting like some nice defined risk. I suppose you're beginning to see it today in things like ES. But the one thing I will say about TLT is that regardless if you have an idea about the market or a thesis about the market, whether it's right or not, just wait to have some type of defined risk or some type of market turn.
Exactly.
Like Coinbase right now, it's not great, but at least below $69, okay, I will cut my risk there and get out. Like if you were to buy TLT, where do you get out?
That's the epitome of like catching a falling knife. Like, and that's a very sharp knife. That's literally where that term comes from. Like if you were to buy this right now, you'd be catching a falling knife, which obviously is a dangerous game. And the odds of you grabbing it by the handle, I think in this case, are far less than 50-50.
This stuff really doesn't have much upward drift over time either. So it's not like it has to come back. I don't know. Enough of this.
Yeah. Speaking of lack of upward drift, we have clamoring among the audience. Phoenix asking about OJ and Ryan also asking for some OJ analysis.
I saw that in yesterday's chat, or it was the messages after the chat, not the live chat. Yeah. let's bring up OJ. I think it's
been a while.
astoundingly it's not crowded yet. So yeah, I mean it's pretty neutral. Like interestingly enough, it's not
Yeah, that is
like people were shorting it a lot more at the start of the year earlier in June.
I
Now
think.
it's pretty much back to neutral.
What do you think about the thesis that like, the hurricane, like people thought that hurricane season was over, and then we had this other tropical storm emerge, obviously affecting Florida massively. Do you think it's just like a seasonality thing and it comes back down to earth? Or do you think this continues to trend based on the fact that, there's not a whole lot of people shorting this right now?
Yeah, so I mean, I'm no meteorologist, but like global warming, climate change is critically impacting crops in a multitude of ways. But I'm not going to kind of play off of the fundamentals of orange juice because obviously, the supply reduction has already been reflected in price a lot. I can't really short this because there's not a lot of crowded positioning. And
We need to go
I
back
don't
to
know. It's a tough one to
We
do you
need to-
buy it here because it's not really crowded to play trend following, or do you short it, but it's not that crowded and it could plausibly just go up to 380?
In my opinion, I think it's a buy merely based on positioning. And I do agree with you that like obviously the supply reduction is already priced in. But just looking at the positioning that you showed was enough to convince me that like, it's not overcrowded whatsoever, which surprises me when you see a chart that looks like that and is making 52-week highs. You'd expect to see some factor of overcrowding, but we're not getting that at all with OJ. And I think that the juice is on the loose and it's going to keep running. So,
Oh boy.
I had to make some sort of joke like that. Come on. But yeah, go think all the way back to that. Remember that Fox clip that you shared of like the farmer talking and he's like,
It was in Miami. Yeah, it was like our local Florida news. They're like,
that
yeah,
was like, what was that? That was like January, right?
yeah, you're right. It was around here.
Think about that for a second. Like if we would have, like that was such a nice move following that supply shock. So I think what we've seen so far is supply shock, but I do think there is a plausible chance that we see continuation merely based on the fact that the COT data and the positioning of traders, it's just not an overcrowded trade. So it tells me that it can go higher, and I think it will. So, but that's my thoughts on OJ.
Yeah.
And I think into the winter months, like speaking to that seasonality, last thing I'll say, I think also obviously benefits OJ in terms of like supply diminishing during the winter months. So
yeah, it's notable. You look at the levels of longs and shorts earlier in the year, and like we were like specs aren't even as long as they were earlier in the year, and we're way higher, which is actually a really interesting statistic. When you compare that to something like I mean, I love going back to the cocoa example because when you look at the positioning, it's it's at an all-time extreme level. So we'll see ultimately how that plays out. But yeah, it's been a puzzling one to trade unless you just like held it. But unfortunately, we can't just put orange juices into our ledgers and lock them away.
You're wrong. I've actually been stockpiling oranges. I got a huge stockpile that I dive into. Like
Frozen citrus. You're investing in seeds.
It's honestly not a bad idea. I've thought about that, but no, I'll just stick with the markets. I don't need to buy. Imagine like getting physical delivery on an OJ contract and like getting like thousands of oranges delivered to your house. I remember we were talking with um what was his
Cricket,
name?
cricket futures.
Cricket Features. No, what was the Billy Goat, or what was the old goat?
Ugly old goat.
Ugly
Tone
old goat.
Base's friend back
Yeah,
in the day. Oh
yeah, I
god.
remember he
What?
was telling me a story about how he was trading cattle futures, and one day he just he couldn't get out of a position, and like a cow, they literally just delivered a cow to his door, to his front door. He's like, "What the hell am I gonna do with a cow?" But
That dude
anyways,
was he was something else.
yeah, R.I.P. He was a crypto OG.
I think he's still alive. Is he
Oh,
not?
is he? I thought he passed. No.
That was Tyler Jenks, a different guy, the guy who did Hyperwave,
Oh,
who
well
wrote the
then,
Hyperwave book. Quality contributions nonetheless.
yeah.
But
Last thing, S&P pulling back pretty hard here, getting rejected off that level as was expected. Don't be surprised to see a little bit of maybe reversal um, in the end of day and kind of coming back up to this level. But unless we clear this level, I think we're risk off in equities. This is a very critical level. We saw it yesterday. We're seeing it continue today to maintain its critical nature. And basically, that's kind of forming my risk on, risk off thesis for most of the market. So,
yeah, let's I mean, I'm just gonna let this thing fall until the shorts stack up, and then if the shorts stack up and you get some defined risk in a bullish candle, and maybe some bearish news that price reacts bullishly to, then it's worth a long in equities. Until then, there's really nothing to do other than like go find a way to spend your time and enjoy yourself and not look at charts, or um, you could set up a terminal, or doing a variety of things. Um, let's just check on bean oil here as the last trade.
I'm still holding.
Yeah, so what I like to do is like when we came back up, once you got the rejection from that level, it's kind of confirmation to reshort or go back into the short.
Yeah,
So
props to you on this one. I entered as soon as you called out that bearish cross. And that was like a week and a half ago. Um, it's been it was a bumpy ride to start, but now it's sitting pretty, and I'm very happy with the way this trade's been working out. What do you recommend if anyone else followed this trade and they're in it right now? Would you say today is a good day to take some profit on this one because it is down pretty significantly, or do you think that you can ride this secular trend even further?
yeah, I mean, now I'm just doing trend following. So so for instance, everybody's got a different style. Everybody does things a little bit differently. So it's hard for me to say, oh, if you've made a ton of money, don't take profit. Like
Right.
obviously, do whatever you need to do and what helps the equity curve in your accounts. But just what I've done personally on this one is that uh, I have been kind of trying to short in and out of it throughout this entire like area. And now I've got some entries at higher levels, so I'll just likely going to hold this one. And my price target long term for this is 40. And that could take up until 2025 to reach. But if you look at the back of a lot of these boom and bust cycles within commodities, they just take a long time. But
It reminds me of what you were talking about yesterday. Fidelity's best investors were dead people.
oh yeah, no, this is like inverse investing right here,
Yeah.
honestly. Because there's no, like, you have some of these boom and bust cycles, but they usually always go back to, like, I hate to say the word always, but they usually go back to the 20 to 40 range.
Right.
And obviously there was a lower inflation back in the 80s and 90s, so maybe it kind of goes up over time, but 40 this level kind of still, like I would expect price to come out and plateau like this over the next couple of years. Oh, using the white line. Kind of like this. So that's the idea. Simple. If price invalidates that idea, then it's going to be pretty obvious with a turning of this moving average. And but you know, if you can catch a move like one of these or one of these, like that makes you know, if you're only risking like 70 basis points, you know, you could make 400 or 500 basis points on that trade. You only need like 3 of those trades, and you know, that's 15%. And as long as you can, you know, manage the other losses, and you know, you can make money over time. So
Yeah, agreed.
I'm excited to get into trading more crypto. We used to do like a daily trade on Doge of the day. I think I kind of want to start doing that again, or some type of like volume, unusual volume.
Unusual. Yeah.
Something.
I mean, there's plenty of options to choose from. I mean, look at some of these Kava.
Yeah, like Luna would have been a good example for today of like that case.
And this one is interesting to me. Maker up 5% today.
Have you seen the Maker chart?
Yeah. And Band Protocol, like what? I was very surprised to see these two on the hottest on Twitter in the last 24 hours. Like, who's talking about Maker, really? I mean, it's surprising.
The only people who have been talking about Maker have been hating on it.
Yeah, exactly. And the price is just going up. So that's pretty funny. But yeah, I think that's all we got for today. As always, definitely head over to tradethechain.com where you can get a 14-day free trial. That gives you access to the sentiment dashboard that I just displayed there. Also gives you access to the Discord with CJ, myself, Nick, and a whole lot more traders from all around the world. Also, please don't forget to hit like and subscribe. It really helps out our channel. But I believe that is all we got for today. We'll be doing another episode of Trading Rebellion later today with Nick. What time is that at, CJ? 1 p.m. Central, right?
Yes, sir.
And yeah, until then, happy trading. Thanks for everyone for watching and participating. As always, appreciate it. And we will see you at 1 o'clock. Have a great rest of your day and take care.